It's Sebastien Boyer, the approved guy, and I'm coming to you starting today. This is my first live stream, and hopefully it's going to work. Testing it out right now, whether or not this is going live, and if you're seeing me or not, please chime in, and I'm going to just talk a little bit and keep doing this, and so hopefully we'll have more and more visitors coming in as I continue to do this on a weekly basis. My plan is to do this every Thursday between 12 p.m. to 1 o'clock p.m. We're going to do a live stream to just talk money, talk business, talk life, whatever you want to talk about, and whatever information I have that I can share of value to you, whether you're starting a business, you want to talk about funding for your business, you have questions, questions about personal credit, business credit, you have questions about insurance, whatever I can. If I don't have the answer, I will tell you I don't have the answer, and I will potentially bring a guest on the next session who can help us answer your questions. Because though I have lots of information, I obviously am a human being and I don't have all of the information. And so I'm here to learn and grow, just like hopefully so are you. All right. So if you are seeing me live and you want to participate, if you'd like to jump on and chat with me, please do so, and know that I am willing to take your questions. But if I don't see anyone asking any questions, I'm just going to talk. All right. So I'll give it a sec see who's going to join. If anyone has any questions, anything they want to talk about. I'm going to open up the chat here. How do I do that? This is my first time, guys, so it's okay. It's not about being perfect. It's about learning and growing. And this is my first live stream. I should be streaming live on YouTube and on Facebook right now. That's what should be happening. Let's see here. Where is this feature? Stream information. Okay, no, that's not it. Let's go here. We're gonna go to new window. We're gonna go to Facebook and YouTube. Let's see if you guys see me. Yep, here I am. I am live. I see myself. Oh, thank you, Ryan. I appreciate the comment, man. Thank you for saying that. Appreciate it. Anyone else have please jump on. Please come on. I'm doing this for the first time, like I said, so I'm not gonna have this done perfectly. I'm actually late on joining my own live stream, which is hilarious. If you have any questions, just let me know. All right, well, I'll just go ahead and talk. So, so let's see. I guess talk a little bit about me. I have been in this space of business funding for almost 10 years now. I'm the director of funding with Orange Fi, which is a business finance consulting company. We basically facilitate about 12 business funding programs, everything from SBA 7A loans to equipment financing, asset-based loans, term loans. There's so many options. It's really just, what are you looking for? How much funding? Are you looking to invest in real estate? Are you looking for private money or hard money? Are you looking for a bridge? Are you looking to invest in crypto? Do you have assets and equity that you can leverage to get a loan out of? Maybe you have high cash value in life insurance and you can collateralize that to get a line of credit. Maybe you're in a position where let's say have a 401k or an IRA, or that is not connected to a company that you're working for, and you can leverage that, and you can use that as you can roll it over and do a self-directed 401k rollover without paying any penalties or fees that you would have to pay if you were to borrow from the policy. So there's a lot of different funding options available on the market. If you're watching the stream and you have any questions, then please please chime in. Please let me know if you're seeing me, and if you want to talk about money, funding, just chime in. I guess I'll continue just kind of talking about personal credit. Personal credit is obviously one of the foundations of your financial situation, right? Because if you don't have good personal credit, then you're not going to be able to qualify for pretty much anything. You won't be able to get approved for a car loan. You won't get approved for a mortgage. You won't even be able to get a credit card. So if you're starting out and you're brand new and you don't have any personal credit, what can you do? How can you build personal credit? So I'll just start at the bottom. Someone, either you're young, coming out of high school, going into college, and you don't have credit. Or maybe you're a little older and you've never built any credit. You've done everything on cash. Or maybe you messed up your credit really bad. And so now you're in a situation where you either need to fix or repair that credit, and you're trying to rebuild new credit. So, how can you do that? Well, first of all, if you have bad credit, you need to get a handle on that, right? So you might need to work with an expert that can coach you through disputing derogatory items on your credit to clean that up. But that's one side, is cleaning up bad credit. Building new credit is different. So cleaning up credit and building credit is two different things, right? So let's talk about building. Okay, so if you have nothing on your credit report, what can you do? You can, number one, apply for a secured credit card, right? Capital One is very friendly. They have a secured card you can get. You can get a gas card. They're very friendly. A retail card. Ladies, Victoria's Secret's very friendly. Old Navy, very friendly. They'll give you a line of credit, a credit card, for $100, $200, $300, and you start there. Now, the problem with credit cards in particular, is that most of us are using credit where to pay for stuff we cannot afford. So we're not leveraging credit. We're using it unwisely. We're using it to pay for things we cannot afford, and then that becomes bad debt. So the difference between bad debt and leverage is that you're going to use the credit to create more credit, and the objective is not to sit on balances, but is to pay those balances off right away. So you really should only purchase something with a credit card that technically you could pay for, but you're going to use the credit card for two reasons. Number one, because you're going to build credit, number one. Number two, that credit card might give you some type of rewards or some kind of benefit that you're not getting if you use your cash or your debit card, right? So you want to get cash back, you want to get rewards points, you want to build credit so you can use a credit card, right? So if you're going to start building, you can set up an account with a secured credit card. You can get an account for gas. You have to buy gas every day, right? You have to, and then get a retail card, right? That's 3 accounts right there. Now you could also set up an account with, there's several companies that are allowing you to set up accounts where you don't have any credit, no credit pull, and these are fintech companies. I'll name a few, and I'm going to put later on, after I save this video, I'll go ahead and put links in the description. So if you're going to watch this later, you could click those links. But you can look up the Extra card. This is a debit card, no credit check, that's going to connect to your checking account, and it's going to move money from your checking account through the debit card. It's a MasterCard, and ultimately what it's going to do is it's going to record those transactions through the Extra card as if it was a credit card. So it reports to your credit report. It's going to build your credit, and it's also going to give you 1% rewards points. So if you're using a debit card with your checking account, you're not getting anything back. You're not building credit. You're not getting rewards points. You're basically just, spending your cash. But if you connect the Extra card, it's going to build credit and you're going to get rewards points. So I've named 4 accounts so far that you can use that will help you build credit. If you're starting out from the bottom, a secured credit card, 2 retail cards, recommending a gas card and a retail card. Again, ladies, Victoria's Secret maybe, or something like Old Navy, JCPenney. These retail cards are very friendly to give you a small amount of credit. And again, you're going to make a purchase and you're going to pay it off right away. You're not going to sit on the balance and start accumulating debt and interest on the credit card. That is not the objective. The objective is to build credit and start taking advantage of rewards points and cashback and travel points. That's the objective. That's what we want to do, right? We're talking about something called velocity banking. That's what we're talking about. But this is velocity banking 1.0, the very basic principle, which is giving every dollar that comes into your personal economy at least 2 to 3 jobs before you put it back into the world, right? So if you're using credit cards properly, you're not sitting on balances, accumulating interest, compound interest. Credit card interest is the worst interest. It's compounding. Don't do that. But if you use the credit card, make a purchase, immediately within a day or two, pay that off. You avoid the interest. But the record of that transaction is going to build more credit and you're going to get back rewards points. So that's the point of leveraging credit, is that you want to use it to grow credit and build points. Okay? If you're starting at the bottom, get a secured card, 2 retail cards, set up 2 or 3 fintech accounts. So number 1 I said was Extra, the Extra card. You can also set up Chime. Chime is going to give you points back. You can also set up, the Self account. Self is basically a savings account that you can set a minimum savings amount, and they attach the savings account to a Visa card, right? So the Self Visa card basically is not a credit card. You're not going to have a credit check. You're simply setting a savings account. So you set the limit, let's say 10,000, 5,000, 2,000, whatever you decide, and you're going to allocate every month $10, $20, $100 to that savings account. Well, what that savings account with Self does is it reports it, because it's connected to a Visa card, to your credit as if you were using a credit card, or if you had a loan. So now you're building credit on your credit report just by saving money. Once you reach your goal, let's say your goal is $2,000 or $5,000 or whatever the case is, then the Self account is going to unlock the card, the Visa card, so now you can spend your money. So this is not a credit card. This is not a debit card. This is something completely separate. This is a savings account that is attached to a Visa card that allows you to save money and reports your savings every time you make a payment towards your savings goal to the credit bureaus. This is going to build credit. That's what this is going to do. And it's also going to let you save money, right, guys? So as soon as you reach your goal, you can start over and keep doing it. So now, so far, we have 4 accounts, 5 accounts, 1 secured credit card, 2 retail cards, the Extra card, and either Chime or the Self account. That's 5 accounts. Once you have 5 accounts reporting on your credit report, after about 6 months of positive utilization, your scores are going to start to reflect that. You're going to start to see your scores move up very quickly, and you want to get to the point where you're at at least a 700, 750, and after about 6 months without any inquiries, you should then be able to apply for a regular unsecured credit card, and you should be able to get approved with a good decent limit, maybe $1,000 to $2,000, right? But you have to start somewhere, right? And again, this is if you've never built any credit, or you destroyed your credit, you're fixing it in repair, and you're trying to rebuild new credit. And we're talking about personal credit right now, guys. Thank you, Andre Walter. I appreciate your comment. I'm going to hit like on that. All right, so this is some strategies of how you can start building your personal credit, right? Okay, so now you have good personal credit. What are you going to do with it? Are you gonna buy a car? Are you gonna buy a house? Are you gonna try to leverage that to get a loan to start a business? Guys, remember the key word here is leverage. When it comes to credit cards, do not carry balances. Use the credit card, pay it off, avoid the interest, accumulate points, grow your credit. The compound credit effect is what I like to call it. And what starts to happen is you're going to start getting limit increases. You're going to start getting incentive cards with 0% promotional offers and rewards points. Before you know it, you can get credit cards with limits in the range of 2,000, and that's going to go to 5,000, 10,000, 15, 20,000 with rewards points, cashback. If you're traveling all the time, if you manage your credit properly and you use it the way I'm telling you, you can literally travel without ever having to pay for flights or even hotel accommodations if you use the credit cards wisely, right? So if you're aggressive and strategic with using the credit cards, you can pay all your groceries on your credit cards, pay the credit card right back. You can pay every bill or every debt that you have with a credit card, or that allows you to pay with a credit card, using a credit card that's going to give you rewards points, right? And then immediately pay that off, right? Why? Because you have the money. You could have paid it with your cash or checking or debit card, but you're using the credit card to build credit and to get the rewards points back. Eventually, if you start practicing this, you can get to a point where you have rewards points to pay for all your Christmas presents when it comes time for Christmas, or when you need something, you don't have to come out of your bank account. You can use your rewards points. If you're traveling, you can use your travel points. If whatever it is that your strategy is, whether it's travel, rewards points, or cashback, you can grow another stream of income using credit cards. Again, do not let the balances sit. Do not let them accumulate interest, and do not sit on that high credit card debt. That's the worst thing you do. The compound interest of credit cards is the most expensive thing. And if you don't know what compound interest is, let me explain that to you. When you have a credit card or any loan that has a compound interest, what that means is you have interest on the credit card. And so even if you pay the credit card, by the due date, it accumulates interest. Okay, so you pay off, your monthly payment, you get your interest fee. A year later, what's going to happen is they take the interest from the previous period and they add it back to the new balance. So your interest compounds. And so that's why if you sit on high credit card balances and you don't pay them off in large chunks, and you're just paying the minimum monthly payment, you're not only are you paying the interest that's there now, but it's going to compound year after year after year, and you're never going to pay off your credit cards because it's compounding interest. That's the worst thing you could do against you. That hurts you. It's not helping you. Now, the opposite happens if you figure out a way where you can get compound interest back, right? And so how can you do that? How can you get compound interest back to you, right? So I'm going to leave that for the next live stream. This one's just a short one today. It's my first time. I'm putting it out there. Next Thursday, sometime between 12 to 1 p.m. Eastern time, join me live on my stream. You can go to my YouTube channel, which is The Approved Guy, or catch me on Facebook at The Approved Guy. And I hope if you're going to see this video later, you bookmark me, you check me out, watch my content. What I'm doing is I'm trying to share the knowledge and the information that I have gained over the years. I have made mistakes. I have gotten into debt. I have mismanaged credit, and I've learned how to manage credit properly now. I've learned through trial and error how to properly manage debt, right? I've learned what not to do, and so what I'm trying to teach my audience is what to do, as well as pointing you to the resources and tools that you can take advantage of to implement some of the strategies that we're talking about. So today we covered primarily just personal credit, and if you're getting started building personal credit, some basic steps that you can take. And next week I'm going to talk to you more about velocity banking and exactly how to leverage debt to eliminate debt using a strategy called velocity banking. All right, guys. So this is Sebastien Boyer, The Approved Guy. You can always reach out to me on my channels, inbox me, message me. I look forward to connecting again next week, and God bless.